Welcome back to another video. My name is Adam. Today we're going to be going over oil tanker stocks, what I'm doing with my position in Nordic American tankers, as well as news that's going on in the market. We're going to look at some technicals, as well as the recovery of the world post-pandemic. Okay, so NAT and other oil tankers have had a pretty good week. As you can see, NAT's up 8% over the week. Frontline was a pretty big winner, sitting at close to 14% up. EURN was also up by 4%. But over the past month, it was up by 17%. So EURN was definitely quite a winner over the past month, sitting at just under 10 US dollars. So again, I'm still bullish on NAT. As we can see, this is my position for full disclosure. I have 350 shares. And right now sitting at a loss of $752. Again, I bought in at the hype, at the top, when everyone was talking about oil tankers and spot rates were going crazy. And that's definitely not when you want to buy oil tanker stocks. Okay, so I will definitely be riding this wave out. And I mean, it looks worse than it actually is, just because I've received about like $200 or so worth of dividends. But again, a little it's just like a cautionary note that just like don't invest if you're not willing to lose a lot of that money. Okay, so let's just go straight into the technicals. Recently, I've been looking at Bollinger Bands, and I've found that they're a pretty good way to get into and out of stock, or it can, at least for the short term, determine a pretty good price point at which to buy some shares. Okay, so generally this is the 2 standard deviations above and below the 20-day moving average, so in the orange line, and when basically the candle or the whiskers hit the green or the bottom, that's when you want to buy. And when the candles or whiskers are near the top of the Bollinger Band, the upper band, that's when generally you would want to sell and probably not buy into a position. Of course, anything could happen. The stock could even rise higher. But as we can see here, if we're just solely going based off of technicals here, I wouldn't buy NAT stock right now, sitting at $3.56, just because it is surpassing the top Bollinger Band. And generally what happens is, as we can see here, this is when part of the candle was over top of the top Bollinger Band and the stock fell. And when the stock reached the bottom Bollinger Band, the stock actually went up in a nice trajectory for a little while before falling back down and then resuming its bullish note. Okay, so there's a lot of talk in the oil tanker market about a couple of people getting destroyed on their puts on oil tankers. So there's a bullish sentiment, also probably from the economy reopening. There's another bullish sentiment, but generally, again, this is just one way where, of course, the candles didn't go fully down to the bottom Bollinger Band before retracing back up. Okay, so of course, these are just only indicators. Anything could happen. But even if you're looking at the RSI and the MACD, RSI is at 62, indicating that it is kind of oversold right now. So I'd be hesitant if you want to initiate a position in oil tankers right now, because it could be just like a pretty bullish environment that we're in for oil tankers, and just like be careful. So here, probably don't want to buy in. Wait for it to sort of come towards the bottom Bollinger Band and then potentially get a position. So NAT is actually reporting their first quarter 2020 results on Tuesday, March 25th, before opening of the bell. So I'll be looking into that. But people are projecting them to actually have revenue declines, probably not as bad as their Q4 2020, but still they're most likely not going to be profitable. And they'll probably announce a dividend of probably around like 2 cents per share as well. So I don't expect anything great to be coming out of the Q1 report. But of course, I will be holding my shares just because I don't see any point in selling right now at a pretty steep loss. So let's just go on to the weekly tanker rates by Clarkson's Plateau Shipbroking. So yeah, shout out to this analyst. Suezmax was actually down, which of course NAT operates solely in Suezmax fleets. VLCC was up, and so was Aframax. VLCC carries 2 million barrels of oil, Suezmax carries 1 million barrels of oil, and Aframax carries 500,000 barrels of oil. And there was actually one guy who, I forget his name, but basically I asked on my last tanker video why Aframax, when it carries only like half as much as a Suezmax and a quarter as much of oil as a VLCC, why their rates are so high. Even 2021 year to date is basically like just, basically the same amount as the spot rate was the same amount as Suezmax vessels. And he was saying that the reason was because there's an increase in the demand for shorter routes to transport oil, and that's why Aframax, which generally just ships oil a shorter distance and does those kind of contracts, they have been obviously profiting from that because there's just more demand for shipping oil shorter distances. I'll put the link to the guy's channel below. I totally forgot what his handle is on YouTube. But yeah, this is just the pictorial demonstration here, so we can see, of course, Suezmax in the red still kind of trailing behind, VLCC and Aframax kind of picking up into May. So hopefully this trend will continue, and Suezmax will actually do a little bit of a fish hook activity and bounce back up. But yeah, 5.2% of tanker fleet is currently used for floating storage. So again, nothing surprising there as people are unwinding their supplies on oil tankers because it's very expensive to store oil on tankers. Tanker deliveries, basically, I would say in line with what happened in 2020, but far below what happened in 2018 and 2019. So again, less tanker deliveries is good for the spot rates in general because less supply of tankers means the spot rates of tankers can go up. Tankers sold for recycling. This is already positive news. In 2021, already in like 5 months, there have been more tankers sold for recycling than in 2020 and in 2019. So hopefully more tankers being sold for recycling, especially because scrap metal prices are going up just because of, in general, commodity prices are through the roof right now. So maybe plus, of course, low spot rates. And these oil tanker companies are taking advantage of the high scrap metal prices and recycling some of their tankers, which means, again, in the long term, tanker spot rates are going to increase. So I like to see that. And new orders of tankers, so far for 2021, there's 71 new orders of tankers. Make a note that it takes about 2 years to actually deliver these tankers. So again, I would say this is relatively, I guess in line with 2020. But again, not like nothing too crazy. So new orders of tankers relatively low, and yeah, that's basically it from Clarkson's Plateau Shipbroking Services. So thank you. And if we're looking at the RONI cases. We can just zoom in on that, and this is worldwide too. So in the states is basically already, most states are open from lockdown. Now they're actually doing like services where they're giving 5 people $1 million. I think that's in the state of Ohio, in order to encourage people to get their vaccines. Now, because there's a crap ton of supply, but again, the number of people getting vaccines are decreasing day to day. Okay, and so the states is going to give some vaccines overseas to poorer countries. So again, I like to see that, of course, this wave is seemingly past its peak. I think most of this wave was definitely due to India's just absolutely brutal third wave. And so it's nice that we're starting to recover. And as more and more of the rich world and third world countries are getting vaccines, of course, we can start to see a reopening, and this will definitely help the crude price. So this is the oil price. It says it's $61.95. I don't know what's wrong with Yahoo Finance, but the closing price was $63.88 on Friday. So again, I like to see this. Again, if you're looking at the yearly trend, it went from like less than $40, so $35 per barrel, all the way to $63. And again, in general, that's good for the shipping industry and oil tankers. So again, what I'm going to be doing with my position is holding until I at least break even, and then potentially seeing if I can gain a little bit of a profit. I'm going to be holding for probably the next 2-3 years. Just get those dividends, make NAT profitable again, hopefully as the oil tanker rates rise, and then reassess my position. But again, I don't need that money right now. I'm safe to just park it there, keep receiving the dividends. Again, I'm bullish on the future of oil, at least for the medium term. And by medium term, I mean like 5 to 10 years, because we need all that oil to build out green energy infrastructure. Okay, it takes oil to build out charging stations, to build out, you know, offshore windmill capacity, you know, stuff like that. So again, I'm just bullish in general on the future of oil, and I don't think that this is the peak. That $63 is the peak for oil. And again, oil closely coincides with the spot rates of oil tankers. So yeah, that's all I have to say. Oil tanker, a bit of a contrarian investment, especially right now when everyone's focused on Tesla. I mean, look at Tesla and the EV bubble right now. It's kind of popping. If anyone would say, right? Okay, Tesla hit its peak at like 900. Right now, it's trading at, I think, $580. So if you're into contrarian investing, maybe you should look at oil tankers. Again, maybe wait for it to cool down. I would say a pretty good investment price is $3, and then ride the wave and see if you can get a bit of a profit. If you're more of a swing trader, you definitely don't want to invest here at the top of the Bollinger Band. So yeah, cheers, take care, love you all. Let me know what you think of this video. Please be sure to subscribe and give this video a thumbs up, and join my free Discord, as well as there's a couple links down below to join my channel or join my Patreon. Cheers, take care, see you in the next one.